How's it going, guys? You guys asked for this. I finally changed my camera in the bottom right, so it's pretty good. We closed at 42.69 today. Post market, we're currently sitting at 42.70. So let's get into it. Today was a green day, very beautiful day. We're still maintaining our emotions and we're still moving forward. So a couple things I wanted to get done with you guys. Well, let me go ahead and start with this really quick statement, 30 seconds. I'm not trying to portray myself as some savior from the heavens above, knowing exactly what I'm doing at every time. The only reason why I'm doing TA is because it helps me understand my own conviction when I'm saying it out loud. It's almost like retention for me. So because of that, when I'm sharing it, I could look back at my videos. I could be like, oh, okay, cool. It just so happens that I'm building an audience off of it, and in no way am I trying to sway the thesis that you have in your conviction, whether you are short or long. So that's just a disclaimer right here. I'm simply just showing what I'm thinking. That's it. Okay. So let me start off with the daily. Another thing before we start. This is a macro analysis. I'm not doing the whole fib levels anymore because I feel like we're getting to a point where those levels don't matter only on the smaller time frames anymore. We're dealing with much larger time frames now. That's why I don't price watch day to day. Okay. So to start off, we closed the day at 42.69. That's good. I had mentioned in the video earlier, with the May run-up, you had 3 breaks of a neckline before we saw a run-up. And I said sometime last week that we needed to rebound off of this neckline. And I think about 2 videos ago, I said it was a confirmed reversal. This is a confirmed reversal for sure. You know, we pretty much confirmed that with volume. That's higher than the last 4 days of the average. So what this tells me is that we should see a strong move coming to the upside. Also later this week as well. Hopefully to attack this $46 level at the wick, but at the least I would love to see the $45 level. But the one thing that I love about this daily candle, if you look closely, is that we closed above the open of this last red candle on the drop off. And I believe if you do a retracement right here, I think this is I don't want to get this wrong, but I think this is a 0.618 level last time I checked on this chart. So let me see. Actually, I have it right here. Yeah, this is it. This is around that crucial 0.236 level that I was talking about. Okay. Now here's the funny part though. I had said last time that the relation between this peak that we've seen right here and what we could see moving forward right here, what makes sense if we were to reach this level in between. Hold on, I don't want to get this wrong. I'm gonna take more time on that. I don't want to say anything out of pocket. But on the daily we still are looking strong. Don't get it twisted. Right now, would I expect some sort of drop off tomorrow? Maybe slightly. I mean, it all depends on the strength of the rejection that we would experience moving forward. However, moving forward, I don't really see anything significant in terms of rejection moving forward, and I'll show you why on a more macro stance. So on this daily, you have the MACD that actually started to compress to try to have the signal line hop back over it, but now it's starting to expand forward again, which tells me that there's more strength coming to the upside coming soon. And then on top of that, the MFI, shout out Jen Colado, is still in the positive in terms of the money flow. So that's also a good sign. There's no divergence. They're all moving the same way. All right, so let's take a look at the 3-day. The 3-day chart. This is the one I'm excited about. I had mentioned that a MACD flip would be in the cards if we saw at least 3 days of strength moving up to the day of November 18th. Why? Because a 3-day candle for this will be the 15th, the 16th, and the 17th. If we can hold this green and then open strong on the 18th with a green candle, I would not be surprised to see this MACD flip. And usually what happens when the MACD line flips over the signal line is that you have an event take place where you see strong price movement for the most part. When you see the MACD try to trail up to this signal line, and and the last time that we crossed over on the 3-day chart was 6 months ago, which was the May run up. So I mean, we did cross over right here, but it wasn't confirmed by anything because we were already peaking out. The MACD was coming up on a crucial resistance, and especially we were still in some sort of accumulation phase. But right here, it looks like we're hitting last points of support. We had this confirmed trend line moving up right here, showing some strength. And all in all, this 3-day looks bullish. And I don't know if you guys remember, but there was actually a divergence on the MFI sometime last week where this the candle leading up to it, or was that the weekly? It was one of the two where the candle leading up to this was red, and I was saying there was a divergence on it, but I think that might have been the weekly. But all in all, this still looks really bullish. I'm excited to see what this week comes up, and I have my super duper price targets coming up the week of the 22nd through the 26th. I don't have exact prices. Because anything is possible. The only prices that I truly have are the brackets in which, I'm thinking about selling at for my protection, because I am playing options. But that implied volatility, is looking good. So, and then finally, I would like to show the weekly. The weekly is the one I'm really excited about too. I think this was the one that had the divergence. Yeah, see, last week we had a divergence. Where we said the money flow wanted to go up, but the candle was red, so therefore it creates a bullish divergence. And then there you go. Now you're starting out the week green, and we closed above last week's open before we descended down into this supply zone. So this is what's making me super bullish about this week, is because it's the fact that we were able to close above the body of this red candle that we formed last week, which shows strength for the bulls to be pushing forward. I mean, it's real cookie cutter today. I don't really have much to talk about. I don't want to feel like I'm regurgitating the information. And I got this question asked to me. Actually, it was my first question asked to me. It was talking about the week of the 22nd of the macro break of the neckline, the final one that's descending down. And this is debatable. Some people draw from the body. I know we barely saw 72 for like more than 15 to 20 minutes, but for me that's like the ultimate confirmation. So I'm not too worried about it. But I had someone ask me, for the time zones, how'd you get the 22nd through the 26th? Okay, so let me try to go through this real quick because this will be the last thing that I explain. Let me go ahead and load this up. Right, I think it's, oh, I'm in the right one. Okay. All right. So let me explain this as best as I can. I'll go ahead and turn off these charts. All right, cool. Okay, so when I created my Fibonacci time zones, the rule is when you are structuring a time zone, you need to take the swing low to the swing high of the latest move, right? So I'm like, okay, cool. When I created this Fibonacci time zone, I saw this as a swing low opportunity because we had hit a resistance and we came down. We shot back up. I mean, people have their ways, but for me, this was the most significant because it was falling around the fib level. That's super consistent with the next one that I had. What is that fib level? I completely forgot because it's on the other chart. I don't feel like going back. But I know I drew it right. So right here you had a low of 2.75, and you had the high of around 20.36. So I count that as a swing because it's just one powerful move that just erupted throughout the past 5 days. Like, see, you wouldn't count this as a swing low because technically you did hit some sort of resistance and you retraced back down. So this isn't really a swing anymore. Like with this, it's just one fluid you know, gap up after gap up, and then you continuously closed on the way up. So I felt like this was a valid point to start the Fibonacci sequence. So let me explain it as best as I possibly can. So I explained this in the last video, how Fibonacci sequencing works, where you basically take the summation of the last two numbers that you had, and you double on them, and then whatever that sum is, you take the answer and then double it on the last number that you just let me just show you. So this is what it would look like. 5, 5, 10. Then you have 15 days. Cool. Then you have 25 days. I hope you guys see where I'm getting at right here. And I'll show you what I mean in a minute. And then you have 40 days. And then 40 days is between these brackets right here. I don't know if you can see them. So cool, you know. Now this is your Fibonacci time zone sequence moving forward. This is your 0 bracket, so you know this doesn't count. I don't look, man. It's just the Fibonacci rules, all right. Like when you start off, the first 3 stay the same in the sequence, and then you get your 1 bracket and your 2 brackets to get your 3 bracket. The answer to your 3 brackets, so 5, 5, 10, and then you go 10, 5, 15, then you go 15, 10, 25, then you go 25, 15, 40. So it's like you're just taking the last 2 numbers, taking the sum of it, and you take the next 2 numbers, taking the sum of it, okay, so on and so forth, right? So the same thing occurred right here when I found a similar setup off of a swing low around the same fib level. So it's the same pattern. It's just with a different number. I'm trying to find a way of explaining it where it makes sense, you know, with the rules of Fibonacci, not like me just speaking out the crack of my ass, you know what I mean? But, you know, here we go, 21 days. I hope you guys get what I'm talking about here. Like, this is 35 days. And then one more is 56. So this to me, 56 days. Okay. We'll go ahead and copy and paste this so that way you guys can see the 56 days. I'm talking. Oh wait, it's already there. There we go. Boom. So this to me is the reason why the fractal got stretched out, because off of your swing low and your swing high, these are your inputs. You have an input of 5 right here. You have an input of 7. Okay. When you input a different this is just basic math. When you input a different number into an equation, the result is another output, different from, you know, your last input, right? So because of that, when the sequence plays out, whatever the Fibonacci equation is, your output is going to be different from the results you get from the first time, based off of your 2 inputs. So the first input was 5. So the sequence will play out as 5, 5, 5, 10. Okay, you guys get where I'm going with this, right? And then you have it's so on and so forth. But with this, you have 7, 7, 7, 14, 21. Okay. I'm trying to find a way to explain it so that way it makes sense. So that way it doesn't, you know what I mean? But hopefully I could kind of, okay, here. So here's the math behind it, right? When I saw the run up, I was like, okay, what day does it fall on? Cool. The 27th day within these 2 brackets. Okay. So if you do the math, within that bracket of 40 days, you have 27 days. So the run up, or the peak, or whatever the fuck you want to call it, happened 67.5% into the 13 to 21 bracket. Cool. So if I apply that same math, if I apply that same percentage to the amount of time allotted for this 56 days, right, you get 37.8. So give or take 38 days. Well, if you take 38 days, and you see what that gives you, you get November 23rd, around there. Now, it just so happens that all of our MACDs are kind of lining up to flip on a macro scale right before that week hits. And I showed on the weekly here. I showed on the weekly. Don't pay attention to the time frames on this. I switched out the time of the chart. It's on a weekly chart right now, so it's not going to stay consistent. But I showed on this. I'm like, okay, we currently have a weekly candle that just closed above the body of the red candle that we formed last week. If we could get a major push up above this neckline this week and close above this neckline, then by the time that week comes, I feel like we should see a powerful move come up. So that was basically my whole thesis on this. So I'm sorry if I confused anyone about the whole Fibonacci thing. The weird part is explaining the relation between 0, 1, 2. You know what I mean? Because it's almost like weird. It's weird. So the Fibonacci itself goes like this: it's 0, 1, 1, 2, 3, 5, 7. I mean, not 7, 8, 13, 21, 34, so on. You know what I mean? But the time zones themselves don't show that extra 1, so it's hard for me to, you know what I mean? It's weird. So, but if you want to take my word on it, that's all you. That's just my thesis on it. But I mean, that pretty much concludes my whole thing. I'll just end off with this, you know, just for the emotional aspect. If you have a conviction, stay with it. I mentioned this last week. A lot of people that I've seen get swayed on their convictions and then take back what they said. You know, makes me believe that, like, you know, they're opening and closing positions out of fear, and then throughout the process of doing that, they're just losing money. You know what I mean? Like, that's not a good way to trade. If you're stuck in a position, you're stuck in a position until ultimate failure. You know what I mean? Your failure isn't determined by the results you don't see within a day, but, you know, it's whatever you laid out as the floor plan. You know what I mean? If you take back on that, you're not going to get the exact results of what you were longing for. You know, I made that mistake too. You know, I started off with X amount of contracts, and then now I'm down to X amount of contracts because I sold out of fear. But if I would have just stayed with my conviction, I would have had, I don't know, like 20 more contracts or something like that. I don't know. No, like 40. Fuck. But, you know, shit happens. You learn from it. And now I'm for sure not selling. You know what I mean? So, you know, to me, this reversal looks nice. Hopefully we can see some good strength before Thursday. That'll, you know, maybe peak us out, you know, somewhere around here. Get rejected off of 48.50, I'm hoping, and then descend down into a retrace, maybe above 44.44, or this neckline, and then we move back up. So, you know, that's my thesis. I hope you guys enjoyed the video. I appreciate all you new subscribers, so I appreciate it. Thank you, man.